Good morning, everyone. This is Corey Hinkle. I'll be your host today for the Ankerstar Wealth Daily Update. We've got quite a few things to hit on today, some acquisition news, some tariff pushback news, what to expect with the Fed meeting today, and of course, we're going to hit on a little March Madness because you only have about a day to get those brackets in. Before I get started, I want to remind everyone that this is a financial education presentation. You must do your own due diligence on anything you hear in this presentation. More disclaimer information can be found on ankerstarwealth.com, and the opinions expressed are mine and mine alone. All right, I'm going to give a shout out to a few extra March Madness brackets that have been submitted to our team. So we've got Zach, Hal, Patrick, Sean. We've got Scott, Christina, Joel, Dave, Tim, and I apologize if I missed anyone. All right, so those brackets are in. I saw this on that website. I thought it was pretty cool. You've got for the South and the East portions of the broader bracket. I couldn't get the whole thing, of course, but you've got the averages among all people who've submitted brackets. And the first thing I wonder is who's going to be a bracket buster? You know, North Carolina last night, I know they kind of have a chip on their shoulder. They made it in. Could they bust some brackets? They don't seem to be on the average bracket going very far. But one of those teams, it might have a 2% chance or a 13% chance. They're going to be a bracket buster. So if you think you know who the bracket buster is going to be, throw it in the comments section down there. And we'll see. It starts tomorrow. Get those brackets in. And if you couldn't find the email or something, please reach out to us. We'll get you that. Okay, big acquisition news yesterday. Google announces an agreement to acquire Wiz. Wiz is a privately held cybersecurity company, few years old, growing extremely fast, and priced in this acquisition, priced above 60 times sales for Google. So you kind of do the math and you think, well, Google's not getting a very good price. Google's approach is, well, they detailed it in their blog post here. So they give these points. Vastly improve how security is designed, operated, and automated, providing an end-to-end security platform for customers of all types and sizes in the AI era. Scale cybersecurity teams by providing them an automated security platform. Lower customers' cost of implementing and managing security controls. Protect against new threats emerging due to the advancement of AI. That's a big part of it. Boost the adoption of multi-cloud security, and as a result, customers' ability to use multiple clouds. Okay, a couple things here. So is Google overpaying for Wiz kind of on an absolute basis? I would say yes. Many would agree. The math doesn't make sense there. However, Google is competing against Amazon Web Services, Microsoft Azure, which they point out in the article right there in their blog post, and Oracle Cloud Platforms. Wiz gives them what they believe is an advantage in negotiating with clients or potential new clients. Google Cloud is the fastest growing part of Google's business. And if they can have a cybersecurity advantage over their competitors, they could potentially realize a greater benefit than their competitors. We'll see how it plays out. Keep in mind, Google's been holding net cash of about 85 billion on their balance sheet. So very, very little to no debt on their balance sheet and close to 100 billion in cash. So net cash of about 85 billion. They spend 32 billion to give them what they believe is a competitive advantage in the cloud space and in the cybersecurity portion of that. Could be to their benefit. So pricey, but interesting. It made me wonder, what did the other cybersecurity stocks How did they react? So this is a 1-week performance from, you've got Oracle there, which was mentioned, Microsoft there, Palo Alto Networks, CrowdStrike. It seems like Google paying a premium for this asset is giving some strength to the cybersecurity space. It is a pricey space. They're tough waters to swim in on a valuation basis. The math doesn't really make a ton of sense when evaluating, especially the pure cybersecurity players. But what rings true, and Steve will tell you this true, is the theme is as clear as day. Cybersecurity is more important every single day we wake up. And Google knows that as well. So that's why those premium valuations are in the space, and Google paying a premium valuation further supports that thesis. All right, moving on. Oh, actually, I wondered, you can buy and sell stock in privately held companies through a website called Hive. And we've had some clients reach out and wondering like, want to get some access to SpaceX or a few others. And that made me wonder, I wonder if there's been any insiders unloading shares of Wiz on Hive. So it's a service out there. And they don't. There were no current listings, or I couldn't find any past listings for Wiz on Hive's private company exchange, if you will. I did notice this though, in those top 50 players on Hive, SpaceX, we've seen Tesla under some pressure. Elon's been in the news. SpaceX valuation has been under pressure on Hive as well, which is one of Elon's companies. So it's just interesting to me. You'd still be paying a very high premium to buy privately held shares of SpaceX through an exchange like Hive, but interesting nonetheless. Okay, moving on. This article came out yesterday that Costco is pushing back on tariff, pushing back on their Chinese suppliers for the impacts of tariffs. And I have to give a really specific shout out to Joseph Carlson on this. He pointed something out that is really brilliant with how in a tariff war, Costco would be the likely winner. And here's why. On price. So take a look at this. So these are the top American retailers by revenue. You got Amazon, $650 billion a year in revenue, Walmart, $680 billion a year in revenue, and down there, Costco, $250 billion. So you say, well, Costco, surely, they don't have the size of an Amazon or Walmart, may not have the negotiating power. Well, it might end up being the opposite. So Joseph Carlson pointed out that Amazon sells directly 12 million products. If you count third-party products, it's much, much, much higher than 12 million products listed on the site. Walmart, in each store, you're looking at on average about 130,000 products. Think about all the different cans of this or that and everything, toothbrushes, whatever. Costco, they sell in bulk and they sell volume, but they don't have as much product diversity. They sell about 4,000 products in their stores on average. So how many phone calls do these companies need to make to Chinese suppliers when negotiating for, price generosity when selling to these retailers? The answer is Costco is going to make a lot less phone calls there. Joseph Carlson also pointed out that in this scenario, the suppliers, if you're supplying to Amazon or Walmart, chances are you are not selling in bulk, and that is not a majority of your volume. But if you are selling to Costco, you are guaranteed very competitive volumes just by the nature of the business and the structure of the stores. So you know, in a tariff-rich environment or whatever, a negatively impacted environment due to tariffs, Costco could be the winner there. Really interesting. Moving on, I look at the 52-week high and low list every day, just to try to see what parts of the market are hot, what things are cooling off. We've seen some of those restaurant stocks cooling off: Kava, Sweetgreen, Chipotle. What's the other one? Wingstop. There and a few others. And then meanwhile, there are some restaurants like Yum China has been hot, but Chipotle was on that 52-week low list. So this is that 1-year chart of Chipotle. And they've been under quite a bit of pressure. You know, it looks like year to date, down from in the mid 60s down to the high 40s. So been under some pressure. For what it's worth, I did the math. I wouldn't purchase Chipotle shares, even though I love the product, and I'll purchase the product all day. I wouldn't purchase the shares for anything above $30 a share. If you could get it below $30 a share, I'd love that. But again, totally just my opinion and mine alone. All right. I did see this news article from Chipotle. Different. Notice how different this is from the Costco approach. Costco is hunting suppliers down and demanding softer prices. The Chipotle CEO says for now they are going to eat all tariff and tariff related costs, which is going to have an impact of about 60 basis points or 0.6% on their margins. This is not what you'd expect to see, and might be part of the reason the stock is under pressure. If Chipotle feels like they cannot pass on further costs to their customers, and that they're going to have to shrink margins as a reaction to tariff pressures, that's scary. We expect high quality companies to have pricing power whenever needed to pass on any costs that are needed to those customers. And if Chipotle is feeling this pressure that they can no longer do that, that's not a good sign. And it makes me wonder, how many businesses are in the Costco camp of hunting down suppliers, demanding lower prices, and so on, and how many are in the Chipotle camp of saying, we're just going to eat the cost. We're not going to pass anything on to customers at this time. So this is a tariff update. Very interesting stuff. It'll be very interesting to see what different CEOs are saying in this next wave of earnings starting in April. Last thing, we do get a Fed meeting today. Fed officials are expected to hold interest rates steady, but I can guarantee you the words, the sentiment, the sentences that come from the Federal Reserve today are going to be very impactful. The market will move based on those words. If the Fed is saying that, they're really wanting to shore up growth prospects and economic activity, they're going to aggressively lower rates, you'll see the market react positively to that. If the Fed says something along the lines of, we are not certain that we have killed inflation yet, and we're going to be data dependent around that, the market is not going to like that. So that's what we're looking for. We'll get that later today. And that's all I have for you today. So thanks for joining us today. Don't forget, get those brackets in. I hope you're looking forward to some good basketball in the coming weeks. All right, that's all I have. Have a good one.